welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's. This is our weekend frivolity. Broiler chickens. Been on the road here for the past month or so, kind of have to get sort of settled back into the regular routine of these shows. Well, it does look like we are public. That's good to see. There's a few old timers over there on a YouTube page. Good to see you guys and girls and houseplants. And of course, we have a couple people who are regulars here in the Zoom call. Used to do like Google Meets and stuff, but I think the video quality is a little better on the Zoom. Anyway. So nice to see we have a few people in the actual sort of live room. Actually, one gentleman gave us a glowing review here this morning in the lounge, talking about if I'm not mistaken, I don't know, you tell me, well, I guess we can use TBG. If you want me to read your comment to the world, but wow, it was quite a glowing review. Going to the crypto conference and listening to all these sort of talking heads, I guess this generation's quote unquote experts about money at these conferences. Mr. TBG actually had a cool comment with regard to what he learned at TRI. And how he could actually understand what the hell they were talking about, thanks to his learning here. So anyway, fantastic testament to trying to make a positive difference in this world and trying to help people understand the nomenclature, understand the process, understand some of the basic rules of playing this game. And once you got the rules down, then actually making money at this game is actually pretty easy. Just got to follow the rules, and nobody ever likes following the rules. Anyway, we did a newsletter here this morning. I think TBG's learned how to follow the rules, and so as a result, he's doing well at this game now, so that's good. We put a newsletter here together this week. We haven't done one of these newsletters in a bit. 1st of June, eh? So look at that, boom. Almost 6 months of this year has already gone by. Actually remarkable how quickly this year has flown by, I will say. So what I usually like to do is actually frame most of the conversation around this Broiler Chicken Show, around this newsletter. It is kind of a fun experiment, and FYI, Chris has got an application that he likes. I don't understand half of this stuff. AIing up these shows, so I'm sure AI will have plenty of. Oh, the commentator of this video seems to have quite a potty mouth. The commentator of this video is asking for trouble making fun of Big Brother. The commentator of this video is anyway, you can see he'll go on and on and on and on. Oh well, we'll see what happens. There you go, Andre. Well said. I mean, the irony of it all is that if you work with me and you understand the process, then yeah, exactly what Andre just said there on the YouTube page. Ignore the noise and just trade your setups. In fact, this might be a good opportunity, and I love doing this. I think it makes me a bit unique, but it might be a pain in the butt for people. But let's see if anybody over on the YouTube page can answer this question. But what does Brian think of people's opinions? Do opinions mean anything? And it sucks, it is just a brutal reality of this damn game called, making money from trading. But I don't care, even if it's my opinion, doesn't mean jack poop. I mean, the beautiful part about our Western civilization, and this is what's really in danger of being taken away from us now, is this idea that we are allowed to have opinions. In Winnie the Pooh land, in Vladdy land, you're not allowed to have an opinion. I mean, yeah, you can have an opinion about the weather, but an opinion about your nation murdering millions of people in the nation beside you, and you may be not agreeing with a dear leader, that could get you into a lot of trouble. So sad. And what's scary is you can kind of see these Western societies slowly slipping into this. Let's hope to goodness we can hold on to some of these freedoms that our parents, grandparents, great grandparents, great great grandparents, et cetera, et cetera, et cetera, have fought and died for us to try and have. It's going to be taken away so quickly and so easily. I never said one way or another. What I said is, are you allowed to have an opinion about it? And if anything, the fact that you have an opinion there is one of the hallmarks, Andre, of our free Western society. Don't ever let them take that away from us. Or, is there anything we can do to stop them? Fingers crossed. Let's hope we can all keep our opinions. Now, having said that, does having an opinion actually lead to being a profitable trader? And unfortunately, that opinions are awesome. But unfortunately, quite often the market, let's see if you guys, and one person, I guess, decided, oh no, get a couple of Norway. Oh, love you, Norway. You're awesome. Ironically enough, I used to, in fact, actually, when I was prop trading a million years ago, I used to always say I used to trade this one particular setup. And I used to say, when I turn myself into a robot, I trade like a machine. And the sad part about it, actually, and this will be a good little refresher for everybody. Remember what the Beamish is like. What is the market actually designed to do? Because, of course, the market is designed to feed into your emotions and get you to act emotionally. And of course, those opinions, they get awfully, what's the word? Strong. If emotions are injected into the equation, God, listen to the way that the Beamish goes on about his poor old China or poor old Canada, the nation formerly known as Canada. And you listen to the way I get all triggered. Oh, goodness. So I empathize with all of you and your respective nations and watching them get destroyed by the 1% and the Rothschilds and all that crap. I completely empathize. But at the same time, too, is all of that noise designed to get you to make better investment decisions or worse investment decisions? That's a really good lesson. I had no idea that was going to come out right out of my mouth to begin this broadcast. But really, I hate to say it, folks. The market is designed, very good, Andre. The market is designed, and write this down if you never heard it, because it's a perfect line. It describes the market perfectly. The market is designed to inflict as much pain on as many people as much of the time as possible. That's what the market is designed to do. So, like you all saw it a month or two ago with that crazy Reddit person, and I'm going all in on gold, like literally right into the top of the moon. The market is designed to get you to FOMO and panic, and oh my God, this time it's different, and I better go and spend my hard-earned money now because I'll never have another opportunity again for the rest of my life. That sadly is exactly what the market is designed to do. So anyway, the simple fact that I can actually come on and even have this broadcast, and as long as I try and keep the potty mouth limited and no direct references, like I really try hard not to make direct references to people. So I'll talk about Joey Diamond, and you all should know exactly who I'm talking about when I say Joey Diamond. Who's another one? Alan. I won't use a direct reference, but you all know who I'm talking about when I say the name Alan. Anyway, I often say orange toupees, but I don't think we can use orange toupee now. I think we have to go with white toupee, silver toupee. I'm not quite sure how that's going to play out. I will say that you're starting to see a little bit of a chipping away at the veneer of Mr. Trump of late. I did find it fascinating that the term taco has now started to gain traction. And what's really scary is when, it's one thing to have like idiots like me, 35 followers on YouTube kind of thing, just nonsense barking. But these are Wall Street veterans. These are people that control a lot of money in the world, and when they start openly mocking things like presidents of the United States of America, this is getting into dangerous territory. Because remember, the stock market is really just nothing more than a confidence game. And the more and more you buy into the story, the more and more, rah, rah, USA, rah, rah, capitalism, let's all go make money from trading, blah, 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 the higher the market goes. But if we start losing confidence in the system and you have memes like Taco explaining Donald Trump, oh boy, this. Oh boy, you can't write better fiction than reality. And actually, yeah, I agree with you there, Breachwater. This to me feels like the end of a very long move, and you might even argue that the move started back in 2015-16. I remember there was a beautiful breakout in the market, and we even had it in the version of the dashboard that we had running then. We even had the signal. It was exactly the same signal. And I think that was actually the last serious base in the stock market. And ironically enough, that was heading into the first go round with Mr. Trump. Now we're on the other side of all of this, and I have a funny feeling this is the end of a very long move. It's a bit scary. Anyway, our January barometer, of course, I don't know whether I think I had everything set up on the laptop all nice and pretty and stuff. So now I have to go through the process of trying to set up these charts on the big computer the way I had laptop. So I think I had January barometer on here. Let's see if that's right. Survey says. Are you going to load? Boy, nah, this does not look like the one that I show you regularly. It's a bummer, darn it. Actually, I think I even put a tweet up for it, so I don't think I have to worry too much. Maybe it was over here. Is this it? Oh, darn. That's what you get for trying to half-ass these. Oh, there it is. Yeah, it just turns out I did have it. So anyway, this is our January barometer study for this particular year. And I will say, the traders in there in early January, and when they sort of get the notifications in early January at the beginning of the year of what to expect, because basically Donnie's first 100 days was going to be an absolute train wreck. He was going to try and break as much as he possibly could. Then the market kind of went, oh, actually it turns out he's just full of hot air. And I have a feeling that we're in this consolidation window right now. I have no idea how long this is going to last. Usually it is interesting that when we took that January's price action and spread it out the entire year, there's July 1st, and seasonally that makes sense. Because there's an old adage, sell in May and walk away, and quite often the market will actually just sort of be sideways through that entire May, June window. It turns out the peak comes in maybe like the first or second week of June. And then we pull back into the end of June. And then I've just noticed many, many years. It'd be interesting actually to pull up the Stock Traders Almanac and see what the actual statistical number is. If anybody happens to have that on the site for the most recent Stock Traders Almanac, that'd be a good data piece to have. You can even see on this particular chart, this is actually a chart two bar chart pattern that actually we like to hunt at TRI. That's a buy signal. If the market breaks through that high, and of course you see, yep, that was a buy signal, all right. But I wouldn't be surprised if end of June, we're all like, oh, inflation, oh, silver toupees, tariffs, and then all of a sudden the inflation numbers all sort of abate. Maybe Donnie backs off on the whole tariff talk. Who knows? But I think once we're through this little correction window here in the near term, we got another big leg ahead of us here in the market higher. And then also too, if we look at this chart pattern, this is actually a really, it's an interesting way of looking at the market, kind of like Elliott wave kind of thinking. Usually, and where exactly we're going to start this run, that's a tough one, but usually it's something like 1, 2. Wave 3 is usually the biggest wave if you're an Elliott wave fan. So 2, 3, and then 4, 5. Wave 5 up top here is the end of the move. So if that was a typical Elliott wave move, actually that's not bad. And also too, I noticed, just on a microcosm scale, wave 1, wave 2, 2 to 3, again, the biggest wave. That's how you sort of validate Elliott wave. And then, so 3 to 4 to 5. So again, what I'm seeing here is whether we use this entire range or just this smaller range, this is really suggesting that this is the very end of the move. And the way that you know that it's the end of the move, and this is absolute gold. So somebody hit the record button, try and remember this as you go forward in life. If we say that is our, in fact, actually, I think they even have like Elliott wave numbered things on here. There you go. Yeah, like this. Right? So we can go, yeah, we'll do this one. 1, 2, 3, 4, 5. So the way that you know that, remember what I said, wave 3 is usually the biggest. 2 to 3 is usually the biggest wave. And, what is our indicator confirmation that is also suggesting that, hey, maybe this market isn't nearly as strong as you think it is? Anybody remember what do we use? What's that term? 2 words. Well, no, actually just 1 word. We'll just keep it simple. Starts with a D. Everybody should answer this very, very quickly. Thank you, Glass Insights. I would expect no less from a boss like you. Hey, there you go. Andre's got it. Galaxy Seb's got it. Good. All right. So the point here, maybe you are the only 2 that are listening to me, but the point here is that's how you actually kind of validate Elliott wave, is you look at wave 3 to 5 and you notice that this is quite a bit smaller. So odds are that's going to be on a divergence. I don't know whether this actually, I don't think I have the, oh, I do have the indicators on here. Cool. All right. And so look at that. So you can see the move to 5 here, 3 to 5. Look at the MACD. I mean, it was in complete opposite. Could even argue RSI might have even, and all this is this just, what is this, a 4-hour chart of the SPY? But hopefully you're seeing this concept. What does that say? 75.87. And what do we get to there? 75.32. 75, 73.82. So complete divergence on RSI. So hopefully you can understand that. And, if, we had one guy, and actually there's probably been a ton of them. But one guy in particular likes to watch these videos, and he actually taught himself how to trade just by watching my funny little videos. So the point here is, and just as you saw there with RSI, that was a good example. And MACD, I mean, it's totally perfect example. The way that you sort of confirm the Elliott wave count that, yeah, we are doing a 5 is that this will go into divergence. So that's what I would expect. And my hunch is this probably happens through the month of September. Because what'll probably happen is we come back from September. Of course, everybody has the September, remember September 11th, right? All that kind of stuff. And then we surge to new hires, but it's on not nearly as much momentum. And then we might even, if we're really lucky, get a really low risk sort of setup to actually justify shorting and going short this move up top here. But I will say, come September, October, Chris, are you here? I don't know whether he's here. Oh, he's probably gone. Anyway, maybe he watches this later on. Maybe the AI will pick it up. We'll do it. We'll yell at him. I wonder if the AI changes the transcript. But okay, well, anyway, I think that come the middle to the end of September, we better go and buy some put options, and we better write that down. Can you please staple that to your forehead, please? Because I think there's going to be some serious money to be made there. I mean, like quick. That this might even be like life-changing events kind of money to be made here. If you could hit this fractal top up here, maybe even like a bear put spread or something. It doesn't cost you a hell of a lot of money, but it could pay you a lot of money if we get this punch in the nose here that the January barometer's suggesting. So this, and you know, considering how closely we've followed this damn January barometer here so far, I don't see any reason why not to expect this to play out this way. What I'm really fearful of here is this because Donnie gets whacked? Might be. It wouldn't surprise me. He's made a lot of enemies around the world. And the one reason why I think, and historically, they've attribute JFK, and the reason why they got away with it is because JFK made a lot of enemies, and even his vice president did not like him at all. And the only reason why LBJ was brought on was to try and grab that Southern Democrat vote, because you know obviously Kennedy not very big down in the South. Anyway, so the point of the matter here is I think that Donnie has made a lot of enemies in this world. And ironically enough, that Simpsons prediction, I'm actually pretty surprised that that didn't come true. Well, maybe it was just off by a year. Who knows? Anyway, that's a complete conjecture. I mean, maybe a nuclear bomb goes off. Who fucking knows? But having said that, I do think that at the end of the summer here, especially when we come back from Labor Day, I think actually there's going to be a pretty big trade that sets up here. But right now, I think we're sort of in this phase right now, and there should be good times ahead. That's my hunch. That's my take of all this. Let's see. Let's get back to the newsletter. Always fun to check in on the January barometer. Got a bit off a tangent there. Actually, another reason why I think that getting specifically talking about the TRI tools, and I think we've gotten to the point where these TRI tools are actually worth the price of a subscription. Excuse me, burp. Price of a subscription. I think the breadth indicator here is definitely telling us that we're no longer overbought. We're not really in danger here of crashes. And if anything, especially with regard to crypto, I might actually argue that the entire market's oversold. And pullbacks are buying opportunities. And I could probably go through at least a dozen names. In fact, there are some bids that are working that are really, really close to getting filled, but I don't want to show you guys because I'll only talk about them after I get my fills. So for whatever it's worth, I'm using this indicator as indicator confirmation that I need to be in there buying crypto. And yes, I am trying to get long. I am trying to take advantage of what I think is going to be I think there's actually going to be a substantial move higher here. In fact, somebody there, Breach Water, posted major lunar event on that day timeline in September. Indeed, when we look at our Bitcoin charts here, what really has me fascinated here right now, folks, this is, you remember Neptune into Aries. We had the eclipse window, so you can clearly see the eclipse window mark the bottom of whatever the hell this move was. Then we went Neptune into Aries. And if I understand correctly, that's all about the dreamers. And we have noticed that a lot of sort of fluffy stuff has been happening in the market. And I think you could make the argument, I don't know whether I have it on the ES chart, but I think that basically Neptune going into Aries was kind of like, well, we're into kind of a fluffy kind of market state. I think I have it over here. And they could bid the market back fairly easily. And I noticed that, and this just happened last week, I noticed that when we shifted back, that Saturn went into Aries, man, people's attitudes changed sharply. So, there is the Neptune into Aries. We went through all of this, just absolute insanity here. Now we've transitioned into Saturn goes into Aries. I'm no expert at any of this stuff. In fact, we have one lady, Lucy, I think her name is, on the site. Although I decided I was going to put all the level 3ers off till September. So I think she's kind of pissed off at me right now. But she's been sort of my liaison with regard to celestial stuff on the site recently. So I did notice that Saturn goes into Aries. Something dramatically changed here, to the point where things like the taco meme started to come up. And I hate to say it, but that whole Trump con job around his Trump coin and his Trump stock. I mean, the guy's a god. Go watch your P's and Q's, Brian. No ethics whatsoever. No ethics at all. And what I absolutely love, of course, is I love picking apart this kind of stuff. And I remember when there was the Trump University. I don't even know whether Trump University even exists anymore. But I remember, the Trump University, the people coming out of that, the backside of it were just like, this is the biggest scam ever. I just got totally taken. And Donnie's sitting there going, yeah, but what are you going to do about it? There's nothing you can do about it. Sucker. Join the line. I got 1,100 lawsuits all pending right now. Get in line if you really want to. So anyway, what a surprise. He did it again to people. And, I thought this was great. I don't know whether it was this gentleman in particular, but one of the people in there said, yeah, and you know what? And the food sucked too. That was perfect. So tragically, I actually think a lot of this crypto rally of late was just purely pumping up the market into this Trump event. And what's fascinating is to actually look at his stock itself. I teach people to try and trade setups, right? Try and find multiple reasons to justify you acting. Then that way, the odds of you succeeding are probably, better than you just having one reason. You might argue 200 SMA, trade location, 50% rule, that kind of thing. You might argue, obviously we're up at the top of value and there's no signs of value here. Gaps down below, head and shoulders tops. And then the coup de grace of this entire thing, a massive outside downside key reversal, sort of the cherry on the cake. Wall Street just basically saying, F you, Mr. Trump, and your silly stock you rode in on down on too. That's about the biggest sell signal you're ever going to see in your life. Absolutely remarkable. And of course, here is the coin. And, how many highs do you have to risk against my, chicken poop Brian, I like to have 3 lower highs to short against or 3 higher lows to buy against. And you've got basically the market smiling at you within a bigger smile. I mean, just smiles everywhere. And the irony of it all is just really basic chart analysis. There's the bottom end of the range. So when I originally posted this out, I said, oh boy, does this ever look dangerous, right? And what I tell people on the site is, what are you supposed to think if you ever see the market smiling at you? Hopefully you can see that smile right there. And sure enough, down she goes. So unfortunately, I think a lot of the recent sort of strength in crypto was really nothing more than a function of the people that are behind Mr. Donnie, behind his crypto exchange, his hedge fund manager turned treasurer. And I even posted on this. I'm sure his hedge fund manager probably has a thing or two to say about that chart pattern. Oh, sorry, boss. I'm going to have to short you. No conflict of interest or anything, but you are a short, sir. You can't write this. You literally can't write better fiction than reality. And the perfect you might argue that, okay, this is the technicals, right? Market smiling at you, double top within double top, top end of the range, straight back down, bottom end, blah 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 blah. Right? Technicals, head and shoulders top, 200 SMA rejection, outside downside key reversal, above value, blah 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 blah. Right? And now this is the fundamentals. Why are people shorting him? Because now Wall Street is actually making fun of him. Donnie, yeah, you doofus. They always say, and this is something you should write down, all of you. And this is one thing that I have to always be cognizant of, because sometimes, of course, Brian can get a bit of a head on his head or a head on his shoulders. You ever seen the movie How to Get Ahead in Advertising? That's a great movie. Anyway, they always say, and write this down, if you've never heard about it, this is the number one thing you can learn today, and always remind yourself. Those whom the gods wish to destroy first make drunk with power. I think coming out of November, December, I think Mr. Trump literally was drunk on his own power. And he went for it. And unfortunately, I think he's pissed a lot of people off in this world. Anyway, that's my 2 cents on all of it. Make America great again. Anyway, I won't comment anything more on Donnie and his stock and his coin. I mean, the irony of it all is I think this is nothing more than a consolidation. I wouldn't even be surprised that at some point the Fed acquiesces here, because they basically fought with him for the past 6-8 months. And said, no, we're not going to lower rates. And in the newsletter today, I think we even reiterated that. So, the talking heads here, is that the right term? No, I don't think so. What do I want to say here? The 1%, the Rothschilds, everybody who's fighting against Trump and his policies of, trying to break this world globalist agenda kind of thing. The banksters, unfortunately, in the United States are part of this globalist agenda. And also, too, think Great Reset. I think they've already gotten away with the Great Reset. And ironically enough, a guy like Trump really can't stop the Great Reset. It's already happened. The Great Reset started basically in 2009, 2010, after the fraud and the complete corruption was exposed of the U.S. debt market. And I guess we'll say the U.S. consumer debt market through the mortgage industry. And ironically enough, actually, they're still doing a lot of the same things today. So, I mean, nothing has really changed there, which is so sad. Anyway, so I did find it interesting that in our newsletter rant here, CPI, and of course, they're slowly grinding their way back down to 2%. So I think the Fed's basically getting what it wants. And if we start actually showing some prints here that are 2%, that kind of idea, we might actually find that the Fed really doesn't have any choice. What's interesting is there's some internal measures in the market that are kind of showing weakness. The housing market does look like it's starting to back off. And we're seeing a bit of a shift here in the interest rate picture. And I have to say, I think the number one reason why the altcoin market has not performed this cycle is something that I think a lot of people in the crypto space just simply don't understand. And that is, let's see if I can find this for you. I think probably the best thing to do is just pull this chart back up. It'll take me forever to find it on Twitter and stuff. We want the 4-year money cycle, wherever you are, somewhere in here. Maybe. Fed funds. There we are. I think that's it. Fed funds. So keep in mind that venture capital, of course, is intensely capital cost sensitive. And of course, this was the sickness, and when they took interest rates basically to zero. And you could make the argument in that kind of environment, people would take a shot on Do Kwon. Think of it this way. Novogratz, who is one of sort of the biggest promoters of Do Kwon in that Luna story. Remember, he got the big wolf tattoo on his shoulder and everything. Well, how did he finance his investment in Do Kwon? And the answer, of course, is because interest rates were just absolutely nothing. Fed took them to basically zero, kind of the same way as in our sort of 2000. This is where I first got involved in crypto, and there were funny stories like a Dash and Archcoin and Mobies, and of course Verge and the porn industry and all them. That was that fun sort of happy-go-lucky kind of market. And of course, we had to go through our crypto winter of that particular cycle, but we got us an extra treat in the venture cap space in that they took interest rates back down to nothing. And I think they did this kind of artificially. But again, I think this is more about the Great Reset than anything else. The powers that be will say, well, we didn't know what was going to happen with the sickness. And I remember that stupid Trudeau idiot would go, oh, what would you have us do? Right. All arrogant like, and he was just printing money like a drunken whore, but he didn't understand that basically he was just playing into the hands of the Rothschilds. But we don't need to open up that can of worms. Point of the matter here is they took interest rates to absolutely nothing. So, like I said, last cycle, you had guys like Do Kwon and all that. Celsius, I think, was another one. There's a whole bunch. FTX, right? It got its boom through all of this period. But I would make the argument that it was purely a function of the fact that interest rates were very, very low. So here we are in this particular cycle, and interest rates, yes, they've come off their peaks. This is the Fed funds in dark blue, but they're nowhere near zero. There is still actually a fairly substantial cost to money. And ironically enough, the Fed is really, in a weird sort of way, most of the public thinks that the Fed actually sets interest rates and the Fed actually drives the direction of the cost of money in the marketplace, but that's not the case. There is no way in hell the Fed is nearly big enough to be able to manipulate a market like the global interest rate market. It's impossible. It's just way, way, way too big. So yes, they can control the direction of short-term interest rates in the US. And they do that, of course, through the discount window. But the longer-term interest rates, anything beyond 90-day paper, the Fed doesn't have any control over. So as a way for you to sort of see the market itself, because keep in mind, the market is the final arbiter of everything. This is on the yellow, this is the 2-year US government treasury bond, or it is basically as secure as you're going to get in this effed up fiat currency world. We understand complete corruption of the fiat system. We can pull up the money supply runaway train and, the hyperinflation that we're living in. That's a different conversation altogether. But the point is if you want like the markets based, most guaranteed product, safest product in the world, it's the 2-year US Treasury. We used to trade the 90-day euro dollar paper and 180-day and 1-year euro dollar paper as the market's proxy. But the Fed, in all their great wisdom, decided that that was just too much power for the market to have. And so they took that away from us because they're the Moppets of the early 2000s. And if you know what the term Moppet means, you'll understand how utterly and completely manipulated the Eurodollar market was through this period where the entire market was basically at the mercy of how do you say that? The market was technically bankrupt through here. So what ended up happening was the bankster elites, the 1% who drive and control this world, they really took advantage of the public through this window, through the Eurodollar market. But that's a market that they've put out of business now. And the best proxy that we have right now in the marketplace is 2-year paper. Anyway, that's another conversation for another day. Point here is you can see how the 2-year note isn't moving an inch here, right? You can see like through the sickness, Fed started to lower rates. And then as soon as the market sort of went like, oh boy, this is serious, the bond market just skyrocketed, i.e. interest rates on the long end of the curve collapsed. And you can see that the Fed actually didn't really take rates really in earnest lower until this 2-year paper really started to get going and crazy. And this is where the Fed took rates basically to zero. You could argue same sort of thing over here. Yeah, the Fed was lowering rates, but it was the actual bond market itself rallying to new highs that was telling you that the market is actually demanding lower and lower short-term interest rates. In this particular case, the 2-year paper. And then ultimately, once the market sort of was like, okay, well, the economy isn't going to total rat shit here, and people took their money out of these safe, secure investment vehicles and actually started investing it back in the stock market and stuff, well, that's when interest rates started to move higher in earnest. So you could argue, to all intents and purposes, this yellow line is like a barometer of we think inflation is low, but at the same time, too, we're questioning whether growth is very serious, very real. When you have these bond markets go spiking higher like this, it's like a major crisis. And you can notice the bond market hasn't moved an inch here. So as a result, the Fed actually lowered rates here. And in a weird sort of way, I think they actually wanted to spurn a little bit of inflation back into the system here. They had gotten maybe a little too tight here. But you can see that the market really isn't responding, that the economy is actually broken here yet. So when this actually starts cranking higher, then we'll know that the Fed really can lower interest rates in earnest. But I don't think that comes for a while. So as a result, the venture capitalists, think of Novogratz and his investment in Luna. He's actually looking at the market and saying, okay, well, I got to go and borrow. And right now, US Fed funds sitting this as 3.5%, but I think they're at like 4.25%, aren't they? So I think that the Fed fund should be a little higher than that. I'm not quite sure why that's sitting at that price. But anyway, point of the matter here is, and I don't know, maybe this might not be actually accurate. I'm not quite sure. But the point of the matter here is that short-term interest rates are nowhere near where they were when you had sort of absolutely insane bull markets in things like venture cap. And especially through that sickness window, we really saw it go absolutely crazy. And I think probably the ultimate expression of that was the SPACs. And do you remember that Checkpack guy? I can never remember his name. He was all Captain SPAC, right? And remember, they were talking about fucking China was just going to endlessly grow forever. That didn't quite work out. So as soon as the cost of money actually started going up, and you could argue half of the reason why the runaway growth engine of China has completely stalled out is because the cost of money is actually costing, you know. So until we actually see, and keep in mind the 2-year paper here, we're actually at pretty high levels interest rate wise, and those 2-year yields are not falling. And then if we actually look at like the entire bond market on the yields basis, something like mortgage rates and inflation deflation gauges, well, they're not helping the situation either. So I guess I spent the past 20 minutes, half hour here trying to explain why I think that the venture cap market isn't participating nearly as much as it has in previous cycles. And I think it has everything to do, unfortunately, with the perception of what the trend in inflation is. And unfortunately, as you can see, that's not stopped at all. That's just making higher highs and higher lows and just grinding higher. None of us should be expecting inflation to go down at all anytime soon. Boo, hiss, hiss, boo. As for the 10-year bond, it appears that it's sort of trapped in a range for the time being. And then U.S. mortgage rates, and, in our newsletter here this week, we talked about how new house applications, new housing starts kind of stalling out. Of course, my country, the housing market is an absolute train wreck. And I hope to God nobody in our audience is trapped in that nightmare, because it is the absolute definition of a bubble unwinding now, especially like this condominium market in the major centers of my country. It is exactly what I warned everybody was going to happen, and now it's happened. But I guess with regard to U.S. mortgage rates, you tell me, is that emming out, or did we just put in a W, and is this thing going to start moving higher in earnest? And I did find it interesting that when I was down south, one seller in particular was bitching and complaining the reason why people wouldn't pay absolutely ridiculous price, because frankly speaking, I think she was even now asking about $100,000 more than what I think the house is actually worth. The reason why she thought she wasn't being able to sell the house was that because mortgage rates were so high. And gee whiz, it was so easy to sell a house back when mortgage rates were here. And she's thinking that mortgage rates are going to go back there. And I hate to say it, sweetheart, but that's a sailboat or a ship that sailed, and it ain't coming back anytime soon. So I pity the U.S. Well, and really, like you think this is bad in the U.S. U.S. housing prices are not nearly as inflated as they are in like countries like mine, where now the country is actually going into recession. So not only does it have high prices as a backdrop, and we all know what the cure for high prices is, right? And it's we have not put the kibosh on inflation yet, so that means interest rates are not going to go down anytime soon. And now the country is actually staring at a recession. I mean, you couldn't script a collapse in the Canadian real estate market any better. The only issue is, of course, Brian's usually right, but Brian's usually early. And I predicted that that top would come in a few years ago, and I've just been sitting here waiting. The big question here at the moment I have is, how's our buddy, and actually, I don't think it's this chart I want to show you. I think I have it on another one of these. How's our buddy Hugh Hendry doing these days? Because Hugh Hendry almost made like I thought I had it on here, but it's got too many damn charts as always. Hugh Hendry made like a Hail Mary bet in the U.S. bond market, saying I'm going like all in on U.S. bonds. So I thought I had the chart on here, but I guess I don't. But I wanted to kind of show you. Maybe I have it over here. I think I have it over here. Let's do it. We'll try one more. Come on, baby. You can do it. You can do it. I think it's on here. Hey, here we go. Bitcoin. Oh, there it is. Yeah, treasuries. Okay, so I thought I had this chart on here. So you tell me, how do you think Mr. Hendry's feeling right now? And immense respect for Mr. Hendry. So it's certainly not a criticism. I mean, if anything, you have to respect a guy in the marketplace who said, "Look, this is my opinion. I place my bets. I got to live with the results." I respect people like that. What I hate is when you have people who don't have any skin in the game telling you their opinions. But anyway, so we've been watching this little study, and we've been talking about how we have had location. And if you can try and think of the word licks, this will save you a lot of time and effort in life, right? In the education program, we teach you the 3-step setup: location, indicator confirmation, structure, go. So I definitely think we have location, reload zones, bottom end of range, interest rates are really high. Do we have indicator confirmation here yet? Well, if we pull up the indicators, let's see what we got here. Oh, interesting. So this has been something that's been sort of having me scratch my head recently. Is we just had the U.S. debt downgraded by all the rating agencies, but was that maybe a sell the rumor? Oh my God, did you hear they're going to downgrade the U.S. debt? Oh, get the hell out of bonds. You better get out of there. You better get out of there. And then, okay, well, the debt downgrade just happened. Now what? And what happens? The damn market rallies. So that's like a sell the rumor, buy the news. Happens a lot, folks. This is half the reason why I do these videos and stuff, is to teach you these subtle things in the marketplace that aren't taught anywhere else. Can you try and learn this concept that usually when you see something actually hit the Main Street newspapers, that's actually the end of the move, not the beginning of the move. But anyway, blah, blah, blah. So we are starting to get some indicator confirmation. Right, so we've got Willie here is, oh, look at that. Willie briefly hit back at the end of May 23rd, hit minus 80.36. And we've been waiting for Willie to get stupid here. So we finally got an indication that Willie got stupid. That's good to see. Then we have a potential divergence. The actual divergence will be confirmed when we go through this high here. So we still actually need to see a little bit of strength here, and that makes sense. Because as you can see, we're right up against this primary trend line going back forever. Right? And ironically enough, you listen to social media people, and there was this guy, the Bond King. And oh God, he was telling people, buy bonds, you'll do great, right up at the very end of that cycle, right into that pivot. Oh boy. So I can understand why the public really just doesn't respect social media people talking in the marketplace. Makes perfect sense to me. So, but the point here is, look at this trend. This, and my rule is, can't really justify taking a trade on this market, investing in this market, until you get a W on the other side of this trend line. And look, head fake, psych, not there. Oh, is this it? No, sorry. Oh, no, this must be it. We broke it in. All right. Can I have a W here? Psych. I don't know whether, yeah, we made a new low there. So no W, no W, no W, bastards. All right, they put in a W under the line. That doesn't count. Break it a buck back above the line, and psych. That's evil how they do that. So I think it's in our best interest to wait for a nice clean W on the other side of this trend line. And I think a punch through that would actually give us that punch up there to confirm that big honking MACD momentum, bullish momentum divergence. So we've got Willie stupid. That's a good sign. We've got higher lows on MACD, so we have potential. And of course, we're right up against the primary trend line. What we need now is we need the market to punch through this trend line, confirm that MACD div, rock and roll, And then at that point, can we please get a nice W? And that will be our price structure to justify that trade. So we still got a lot of ifs here. Unfortunately, especially with this MACD concept, and this is why it's really dangerous, right? You really need to take the education program and learn this correctly. I know a lot of people would, call, and I suppose there's a cute little div right there. So that's kind of cute. But a lot of people would say that this divergence here has been confirmed, and it has not. You have to see this punch up through there and actually close above there to confirm that bigger div. And I think that's what has to happen here. And if it doesn't, there is a very real possibility that this goes up, then peters out. We can't punch through that trend line substantially. And then we roll back over, and this turns into a big honking M. And you actually get a huge momentum sell signal there. So that's why it's so important. You can't front run this concept. You have to see the market break out through that level. That's the difference between potential and confirmed. Now, this is an interesting one because we actually do have a cute little W right down in here, and that also was a div. So what this tells me is there's this huge pattern working, right? And this probably is over like a weekly basis. And maybe we get that punch up all the way here, then we get that W, and there's your buy signal. What I think this is telling us here in the short term, just the very near term, is can you see a little head and shoulders? And I better do this so you can actually see it. So there, to there, to there, to there, to there, to there, to there. So if this is a bottom, we would actually like to see this come all the way up here, break that trend line. And this is a legit inverted head and shoulders. If you don't know this, write it down, take screenshots. This is a legit head and shoulders as long as price does not come down below this left shoulder low. And notice how the market is actually set up a nice price gap right there. So you can see they can punch it through the trend line, get all the noobs going long, stupid. Then it'll top and it'll pull back. It will come down into this gap, and this tail, you can see they can actually absorb a bunch of selling because there's a bunch of trap bears in there and they'd love to get out. They want to buy. So they're going to dump the market down into this level. And if there's enough trap bears and also, maybe newly minted bulls, because you can see there's a bunch of horizontal support and resistance in here. If they can somehow hold this low, so it doesn't go through that low there and it turns up, I think we could have the makings for a pretty substantial move higher here in the bonds. Because like I said, you had that funny situation there where the US debt was downgraded, and yet instead of the market absolutely collapsing like the media basically said was going to happen, the market actually jackknifes away from there and it starts to rally. So they might have all of these bears, and especially the new bears that came in on the downgrade, they've got them trapped now, right? And this is my classic little cartoon with the fat guy sitting on the chair. He's got the dancing girls on his legs. They're drinking champagne, top hat, the whole thing. And the caption at the bottom of the cartoon is, and then we went after the stops. And that's what I think is probably happening here right now. So this is literally Mr. Hendry's bacon on the line here. And if you're a fan of Mr. Hendry, I tell you, this is where you want to step up and you want to take his bet, because the risk window here is pretty low. You can see they busted through this low. But I think right now, because they did that, I think your risk window is relatively limited. You can buy an option. If Mr. Hendry is right, and Mr. Hendry is like an uber bull, he's expecting to see this market rally substantially. So, this is actually like the U.S. Treasury Secretary Basant. I'm a hedge fund manager. I manage risk, right? You even heard him publicly say that. This is actually, as trades go, look at that. as trades go, this is a pretty small risk window. And lo and behold, look what fib we are. I don't know. Has anybody ever talked to you about the 78.6 fib? I think somebody even said that it was like their favorite fib at some point in the past. I don't know. You ever heard anybody talk about that? And lo and behold, look where we are. That can't be a freaking accident, can it? So, interestingly enough, I think we haven't got it quite yet. This is the interesting thing of part of this. Can you do like a half a check mark? Because I think we can say we have indicators, right? We can do a check mark for indicators. Willie's stupid. And we've got potential divergence in MACD, but we can't say they're confirmed yet. And remember, it has to be indicator confirmation. So that's hilarious. Oh, goodness. So that's if we were going to do like a play by play. I can't move this stupid thing. Actually, I'm going to get rid of that. Anyway, so because we've got location. Awesome. I mean, we definitely have location. Remember Brian. We've got Willie stupid. So we can get a check mark for indicators are indicating. We've got a potential divergence here in MACD. Indicators are indicating, but we haven't got them confirmed yet, right? And confirmation is we need to see these things W out, and especially a big fat W's and RSI. You know how much I love RSI W's. So can we get these indicators to start Wing out? And actually interesting to see. I think, if I'm not mistaken, we might actually, and so, I was thinking about the January barometer. Because remember I said earlier, January barometer is saying that, we're probably going higher in the stock market. But I think what's going to end up happening here is, yeah, that's what I want to see. Look at that divergence. And I don't know, this actually is a good question for all of you. Notice these lows are lower than this low. Notice OBV. Look how low OBV was here. And look how price came down, took out these lows. OBV did not. And then we did it again. OBV did not. Now, has anybody ever said anything about OBV divergences? Is that more important? Is that less important? Is that significant? TBG, you're a freaking rock star. Licks. Oh yeah, you never heard that one before, eh? I'm always coming up with new shit, eh? That's my favorite one lately. Licks. You got to get your licks in. There you go. And I tell you, this is basically our 3-step setup. So right now we're sort of at L, we're at I, but we don't have confirmation yet. So we can't give a C yet. And since we can't give a C yet, we can't even ask whether we have structure yet. But what I was kind of hoping to hear from you, and anybody who's taken my education program, of course, I scream at you how significant volume is. Since none of you answered the first question on YouTube, let's see if I can do it again. So who can tell me? Volume speaks what? Actually, you forgot the S. Oh, Adam, you made the same mistake. Oh, Nora, you made the same. Think of it, and actually, this is an interesting anecdote of our modern day digital world. Books used to come in volumes, right? You'd have volume 1, volume 2, volume 3, volume 4, right? Like an encyclopedia. Encyclopedia salesman, there'd be like 20 books in an encyclopedia. So the expression goes, volume speaks volumes. And that's just because I'm an old timer, all right? And I'm old as dirt. And yet for some reason, people think I look like I'm in my 30s, which is crazy. But anyway, the expression is volume speaks volumes, right? Volumes. Like if you have a group of books all in one, big book, they're volumes. All right. Brian being stupid. Sorry. If I insulted you there, my apologies. But the point here is, I think it's not actually, yeah, you know what? It looks like his OBV was confirmed because look at the size of this volume bar in here. Like this day right here, ironically enough, is that down? Why does that show? Is that actually an up day or a down day? And I might have my volume bar colors wrong. Oh no, it was an up day. Son of a gun. So look at the size of the buying interest on that one particular day, right in there. Huh. Anyway, so I think that this thing actually stabilizes and it starts to turn back higher. And I think that is what fuels the second half seasonal January barometer rally here. I think that's what's going to fuel it. And I think that probably also helps Bitcoin as well. And then our job will be to go into counting mode. And as soon as we start our rally in July, we should all do this as a group project. All do it together. We should do our count, and when we start seeing 3 to 4 to 5, and we start getting that 5 move later on in September, October. Seriously, Chris, if you're still here, dude, this might just be the trade that makes us, maybe $500,000 or something like that to basically get our operation up and running. It's right there. I can see it coming. Question ultimately here is, do we want to try and play this to the upside? Now, it's interesting. Somebody over there on YouTube just said crypto is finished. And I'd actually argue the exact opposite. And I'd also argue too, and this is a little bit mean to the crypto community, but I hate to say it, I think it's real. As soon as the public starts to think that the market is over, then actually I think a bottom should be coming in. So ironically enough, that's kind of what we got into here. I heard so many people in the public all of a sudden turn massively bearish of crypto. And it's sort of like, oh, that's probably a sign that we're going to turn and head higher. So if anything, the fact that that person, and that might even be a bot, right? Might not even be a real person. The fact that they're actually saying crypto is done here leads me to believe that we go through some sort of consolidation, get everybody and their brother and on Twitter and shit saying that this is over, and then we get ready for another leg higher. In the near term, other than maybe we have a 3-bar fractal that's maybe forming here. That might be something along these lines where we have to do a bit of a correction following the 3-bar fractal. That it's definitely possible. I would say that we're probably going to run into a bunch of support. Notice how many times this is Adam's favorite indicator, I think. 13 EMA acts as support, and it will often act as resistance as well. So I think the market recaptured 13 EMA, and the 13 EMA should act as support here in the near term. I wouldn't be surprised over the next, say, 2 or 3 weeks that, yeah, things are going to get ugly here. But is crypto finished? I don't think so. I might argue if you look at something like the total, if we look at the different ones, in fact, actually, where did I do? I think actually on Twitter, where do I want to do this? Well, yeah, is where I need to. I do half of the work on my laptop, and those charts save, but they don't save over here, which is really weird. Even though theoretically they're the same chart. Okay, where did I do all those? All right, here we are. So, if we take sort of a 10,000 foot view, looking down, what do the 4-year cycles look like? This time fib study is absolutely perfect. Almost all of the tops come in right around this 1.382 following the halving event. And usually market bottoms, and you can see last cycle, very typical. Market bottom usually comes in around 1.618 to 1.786. There's the 1.382. It's just off the screen here. But, anybody that's TRI, of course, knows this study out the butt. I actually do like the idea that this was the first half of the move. then the consolidation, and now we probably just need to replicate this move up top. The question ultimately here is, do we replicate the linear scale move, or do we replicate the log scale move? And that's what this is. This is looking at it from a log scale perspective. Perfectly valid TA. Might be a little bit aggressive. Obviously, these numbers are pretty high. But I've been using this benchmark now for the past while on this market, and it served me pretty well. So I don't really see any reason to change this image. This is like your weekly image. This is your cycle pivot. These are some technical objectives that have been painted for quite a while ago. So it's not really like they're brand new, and it might actually take into next cycle to happen to hit these objectives up top, but very possible. I do like the idea that we're in this trading band, if you will. I also do like the idea that Bitcoin often does like to correct about 80% of its move, its blow off top into the subsequent trough. So I suppose if I can show you, I don't know whether I have it on the big computer, but let's try. Not that one. Over here and then over here. Yeah, okay. Slightly different chart, but you get the idea. It's basically the same thing. So, if you measure this peak here, that was 67, 63, 69. 69, was that our ultimate high there? Somewhere up in that area, right? Yeah, I thought we got into 70s, but anyway, there's 69 even. And this is on stamp. I think that's right. Anyway, so what was the ultimate correction? They brought it down to like 15 and change. So if you think 70, 80% of 70 would be 14 and change. So, basically 70, 80%. I don't see any reason why they can't do the same thing here. So unfortunately, this chart didn't update. So where is, let's try that again. All right. So this is the updated chart on my laptop. Sorry, folks. Anyway, if we think that maybe the bottom comes in, I like this level. Ironically enough, this 50,000 is a pretty good floor. Ironically enough, that's where Tom Lee said he thought the floor was going to be here this cycle. He might even be right, where it dumps down into here and then launches. You never know in this crazy ass life. I do think though that the rally window is running out of time. So I don't know whether there's enough time for us to actually dip all the way back down, unless of course it comes in like one or two candles and then have a blow off top. I mean, anything can happen in this stupid world. But my hunch is we just consolidate here. And I do like the idea that actually on the sort of daily chart, there's actually a short setup working here right now. So remember we had talked to you about the licks, right? So we rallied up against the top end of the range. I think that's pretty normal. We broke out. We played with the level. The question ultimately was, were we going to accept above that level? And unfortunately, one of the sort of major warning signs that we weren't accepting above that level was, you can see the divergence that was developing here. And ironically enough, on basically this break right here, those divergences all started to confirm. Boo, hiss, hiss, boo. So Willie stupid, we're up against the top end of the range. So we've got location, licks, right? We've got indicators flashing overbought. We have the potential divergence. Now the divergence has been confirmed. So now we can go LIC. So we have location, we have indicator confirmation. Now what we're looking for after this break, where MACD goes below the zero line there and you get these M's, we're looking for an M in price. So M's in price, boom, boom, boom. There it is, as plain as day. And now you can even argue we have a valid downtrend line to work with. And this market won't be a bull again until we actually put in a W on the other side of this trend line. Who knows how long that's going to take. And I did find it interesting that just, typical L Tangonator setup. This isn't rocket science. Don't reinvent the wheel. That's my risk window, the M, and 2.35 risk reward takes us to the 50% rule. Seems nice and simple. Frankly speaking, I don't see any reason why we can't go down to that 4669. Seems perfectly logical. I wouldn't even be surprised that we actually have to dip back down and do a Wyckoff check against these highs here and right up against Mountain Man. That would make sense. So ironically enough, from a daily perspective, I actually think there's a short setup here. And why? Well, because this whole move up here was kind of on bullshit. It was all about, orange toupees. And, I tried to warn everybody, things were looking a little dicey there. I even said, that looks dangerous. And I think that half the reason why the whole damn crypto market lifted here was because the powers that be wanted this thing up into his silly little dinner there. And it turns out the dinner was a total scam. And what a surprise. As soon as the scam was revealed, everybody got the fuck out of Dodge. It's just that simple. And the only people that are going to actually be bag holding and carrying this following are actually the people that believe in Donald Trump, that actually are absolute, these people, exactly who I'm talking about. And the worst part about it is those are the people that he takes advantage of most. And I don't understand why his audience doesn't hold him to account. I saw it with the Trump University days. The people that actually signed up for Trump University, they believed in Donald Trump. They trusted him, and he took advantage of them, and he just pooped on their faces. That is the hallmark of this guy. I'm not saying one politician is better than the other. In fact, as an affirmation of how I think of all politicians, how do we know that this gentleman is lying to us? No difference. Nothing ever changes. I'm not saying be a fan of him. I'm not saying hate him. I couldn't really care. Couldn't really care. So what I'm saying is, and actually I stayed with some people in Alberta recently, and they even affirm this. Brian, yeah, you've got a potty mouth. Yeah, you use colorful illustrations. But the one thing I can trust about you, Brian, is you're not going to bullshit me. You are a realist. You're going to tell it like it really is. And I hope you all can understand that. I'm not here to beat up on Donald Trump. I couldn't give a rat. You know what I think about the guy personally. But that's not part of the conversation. The conversation here is, can you trust what he says to you? Can you make investment decisions based on what he says? How do you think this guy's feeling right now? You know the answer to this. And the worst part about it, of course, is once you actually become a politician, you have no choice. You have to lie to the public. There's no way that you can actually speak the truth to the public as a democratically elected politician in our society. It's impossible. So you all know the answer to that. How can you tell when Donald Trump is lying to you? Come on, be honest with yourself. Okay, back to our story. So I don't know whether I don't really, the simple fact of the matter is higher highs and higher lows defines a bull market. So you can't really make the argument that that's a short. I do like the idea that there's a trade there, but frankly speaking, I don't think a lot of the people that watch this video are actually traders. I think you're investors. And where the hell did that damn image go? Maybe I'm on a different screen. But I think that there's a short setup there working. It wouldn't surprise me if this thing gets knocked back down. And like I said, there's no catalyst right now for price to move up. Now that whole Donnie event's over, and I think we just had sort of the Bitcoin conference. I mean, you see what letter of the alphabet. This is the crypto total market cap. I mean, you can see the letter of the alphabet staring you in the face. The cool part about this now is, of course, we can do things like chaos theory, so we can get an idea of where we should be expecting to see support. Boom. All right. Good old Julian's level is going to be basically against those recent lows. And 2.618, oh, what a surprise. That's going to be basically against the original lows. Doesn't surprise me. Then, of course, what's a reload zone? If I actually wanted to buy this, where should I have my bids working? What was that fib that Brian loves? There's some sort of fib that Brian likes. Oh, there it is, sitting right beside the 2.618, sitting right beside this left shoulder low. So if the crypto total market cap, and this is excluding BTC and ETH, looks like this, does that mean that your altcoins are probably going to come back down to earth? Yeah, probably. It wouldn't surprise me. But there are some altcoins that are coming back down to earth. And if I get a fill on this thing, I'll show you it here. I can tell you if I got a fill just by looking at the price. If I didn't get a fill, then I'm not going to tell you about this, because every time I do this, I jinx myself and I don't get a fill. Nope, no fill yet. So I can't show you that one. Sorry. But there is a name that's put in a beautiful W. It popped. It came right back down against the bottom end of the range. And I'm working a stink bid at a gap. And of course, everybody on the site knows what I'm referring to. All I got to do is surf through the site to see. So yeah, could I see this come down here in the near term? Yeah, it wouldn't surprise me. As a, the interesting thing, and actually the bit of a bothersome thing about this, I don't like the fact that they actually rallied this market up into my birthday, because that's a catalyst date. So if they rally this thing into my birthday, notice that was the end of the bull. It like literally stopped right there. I was hoping, and I've been barking at you guys for like 6 months, I was hoping we get the bottom into my birthday. But no, now a top. So that to me, and think like January barometer and that kind of stuff, is I don't think we actually bottom here in crypto until we get over here. Boo, hiss, boo. So what are you going to do for the next month or so? Are you going to short? I'm not really that into that. Are you going to use pullbacks as buying opportunities? Absolutely. And as I said, I'm almost about filled. I'm about 1 penny away, actually about 1.5 pennies away from getting my fill. But I have to be damn quiet, and I don't want to show it to you because I'm going to jinx it. So I'm going to take that off the screen. But we could do other ones. Just look at them. If I was going to wanted to be a buyer, look at the W right here. Look how the market's pulled back right into that basically W. I wouldn't have a problem if little old ladies started to buy stuff like this. Look at that juicy tail that needs to be eaten. That's basically what's happened. How about this guy? Well, this is a pretty good example. You can clearly see the W. So if you were light on your toes and you took that trade, boom, way to go. If you wanted to sneak in on this thing, maybe throw in a stink bid. This is venture cap, and we call the 78.6 to 88.6 a venture cap reload zone. I like a nice bid right down on this guy down in here. That's not a bad idea. How about this Giga? You can see the W, and this is everything, when I showed you that total market cap chart, same thing. You want to work a stink bid down against these lows here, that venture cap reload zone, or Brian's favorite fib, candle body lows for trade location. It's already got the W working. That's not a bad idea. Hey, there's a W that almost came in there. Maybe you want to wait for this thing to actually confirm the W. 6 one, half dozen the other. There is a W right there. So you could technically say this thing's in a buying window as we speak. There's a reload zone. There's Brian's favorite fib. I wouldn't have a problem being long there. Woo, missed this guy. Look at that pop. But draw your reload zones, right? 78.6 to 88.6. You want to sprinkle some bids down in here. And, should we get a 1 or 2 day dump here in the broader crypto market, brings us back down against these lows, that's a fantastic buying level. How about this guy? Ooh, he has not bottomed yet. Tried to bottom. V bottom. Here's a great example. V bottoms need to be tested. All right, are we going to W out? Oh, crap. Just made new lows. And another new low. Oh, crap. Oh, another new low. Maybe give this guy some time to actually put in a W. How about that guy? Oh, hello. New V bottom, but look at this cute little W you could have traded. That's a sick-ass little trade setup right there. Anyway, there he goes. But if you don't want to chase, throw your reload zones in here, your bids, and oh, what a surprise! Reload zones basically going to have you coming in and buying right into that traffic area. Nothing wrong with that. This Tia, I think I saw this Tia. Something's wrong with this story. Did put in a cute little W. If you were trading this, then I would hope you would run the register a little bit on this pop. That definitely is a 2-to-1. If you're a little old ladying this, well, this is like this entire shitcoin market. It's just a pain in the ass right now. And as I said earlier, I think the reason why this market looks like this is because money actually costs money. And so as a result, venture capitalists who are putting money in, they don't see the results. That money's got to go back to the bank, and they just like get out on any kind of rallies. So I might be a little, if anything, this is a little disappointing because that's a pretty good looking W there. But clearly, if you're trading this, the market's told you that's failed. Boo, hiss, hiss, boo. Well, that Baba hanging in there. Yeah, you get the idea. Do you want to wait for more of a saucer bottom on something like this? You could. You want to throw in Nanny Nibbles stink bids? Good old 78.6. Keep yourself honest. Not a bad level. So there is 78.6. Look how that dipped into there and then went woohoo. So any kind of dips down into here against that original market structure, I think that makes sense. I don't have a problem with that. Look at that guy. That guy's basically buyable right now. He's just sitting there. You can see, but www pop, right? And then www pop, and then back down here, www. We gonna get another pop? I don't know. But that's definitely at the bottom end of the range. You're not chasing that, that's for sure. What time is it? Actually, I still got some time here. RAD, gee whiz, this one sure looks good down in here, right? Maybe wait for that W to come in. But, it is cheap. You're certainly not chasing here. But I'd love to see these lows hold. And then if we could turn back up above this level here, oh my goodness, that would be sexy. So fingers crossed. Let's see how these guys do. MLN, same story. WFI, in fact, I think I threw in a stink bid on this guy here. But there was another one. I have all my money all working in bid, so I had to choose which one do I want to bid right away. But I know I had a bid in here at 78.6 on this guy right here. We get dips down into that area. I will be buying. Ooh, this guy's looking a little dangerous. Did pop the tops here. Lots of divs came in, which is kind of a shame. Something happened here where the market was uber bullish and then absolutely puked out with bearish engulfing bar. So maybe if you did buy this on a trade because we've broken these lows, maybe hop off, limit risk there. That's a little disappointing. If you're nanny nibbling, little old lading, just accumulating, bottom end of the range, looks pretty good to me. And was there a gap? I thought there was a gap right in there. Yeah, somewhere down in that area. So you could see that they're going to wash these lows just to fill that gap in. So trade failing. Nanny nibble, perfectly fine by me. Rare, same thing. Looks like these guys tried to break out. There was a nice W there, but it failed. So if you're trading this thing, the trade setup failed, probably best to hop. If you're nanny nibbling, just coming in, buying against the bottom end of the range, I wouldn't have a problem with that. Just remember risk management. Don't break that 5% rule. Ren, look at that. I don't know what the story is on this guy, but there's the W. It's sitting right at the breakout level. No guarantees this thing's going to hold, but does that look like a 78.6? I kind of think so. Let's see what we got here. Boom. Boom. Well, we could throw stink bids in anywhere down in here. I would be perfectly fine with that. So that guy's sitting there. I don't know that you know the story or not. Actually, maybe we'll go off of that low. That low to that high. But if you're interested in the fundamentals, not a bad buying level. And of course, if you want to go through the whole licks process, I'm showing you location. If you want to like really sharpen this up, like we go back to this Ren, and you want to say, okay, well, Brian, if we do get down into reload zones, which we have, All right, well, now I got to start seeing indicator confirmation. Where are my bullish divergences here? Do I see any bullish divergence? Nope. So there's nothing to do. If you're going to take the trading perspective, I like the idea, of course, of licks, location, indicator confirmation, structure, go. So if you're going to do that from a trade perspective here, we're at location, but you can't move anything further than location. There is no indicator confirmation, right? No W here yet. No W here yet. Willie's not stupid. No divergence here in MACD yet. So no indicator confirmation. Does that make sense when I talk that through like that? Bitcoin is money. Everything else is credit. Let that sink in. Okay. Well, anything that has a POW, I'm fine with calling that money. And if, of course, the network's actually used. Did you learn anything about that breach, Water? Where's my buddy in Minnesota? Actually, I heard Minnesota, the wildfires are changing the color sky in Minnesota. Anyway. Okay. No. Not seeing it. Only one person says makes sense. All right. Well, okay. So, how about you guys here in the if he opens his mouth? What? The politicians. Yeah. A lot of us are just hanging out at the Canada Club waiting for doubles. Oh, Canasta Club waiting for, and yeah, and ironically enough, if you're a little old lady, then yeah, that's exactly what you're supposed to do. In fact, actually, it's May, June. You should be out in the garden planting flowers, right? Just like Grimm teaches. Okay, where was I with this? I wanted to show you something in particular. Oh, XMR, right? Because somebody over there wanted me to look at that. So let's go take a XMR. This is Monero, right? Crypto XMR. I guess, well, we even have it on Kraken. Let's see. Oh, yeah. Remember this one ran up violently here recently. So, oh my goodness. This is everything that I try to teach all of you. So first and foremost, can you see how we came down into a buying window here? I use my reload zone. And also too, I often tell all of you that quite often you'll look back over time and you'll see that the market actually bottoms right off that damn 78.6. So looks like this one was a little bit above, but hell, I think you can even make, yeah, look at that. Son of a gun. Drives you crazy. Look how there's a nice W right on that damn 78.6 right there. So this is why I love that 78.6 so damn much. So at this point, right, maybe we ask, is there indicator confirmation? So, wow, look at that. Can you see something here? We'll put all this other way. MACD histogram is my favorite way of measuring divergence, by the way. So I just do something like that. And can you see the divergence? Lower low in price, higher low in MACD. Now you might argue that it took forever for this div to confirm. Let's see. Interesting how did that go to new lows? Not quite, eh? Probably this trade over here set up off like a 4-hour chart. That wouldn't surprise me. I don't know whether I can do that or not, but let's go 4-hour. See if it loads. It might be too far long ago. I guess that was it there, right? So there's that 78.6 level. There was where MACD just absolutely puked out. Oh yeah, look at that right there. Son of a gun. Can you see there to there and there to there? So there's you've got location 78.6. In fact, you might even argue there's a probably a pretty nice little trade location in here. 61.8, 70. I mean, that's like the killer trade location. But I think, with this higher time frame trade location, if you were like hunting, like, oh crap, there's the puke out. All right, give me some sort of reason to get long down here. I like that move right there and trading that whole formation. This also too is a good example of the noob stop. So when I first started trading a million years ago, a guy I used to work with, he would trade M's and W's, and he would put his stop just below this point right here, that second low of the W. And about, I don't know, let's say like 10 years later or so, he changed it. And instead of having his stop there, he moved his stop down to the bottom part of the whole W, because he would get stopped out like this move right here, and then the damn thing would turn right up and it would just face rip the other direction and piss him off to no end. So when I built this education program, and I used to find this happen all the time as well, I'd call that like the noob stop. So don't have your stop below there. In actual fact, hell, I think you could even make the argument there. So like down, up, down, breakout. Don't have your stop below here because boom, they run you out. Don't have your stop below here because boom, they run you out. Make sure to have your stop below that first, what is it? The left-hand side of the W. There's another great learning piece. Nobody teaches this shit online, but you got to risk to that low there. So anyway, point of the matter is, I think that's your buy signal right there. If you were like trading this thing, we go back to the dailies. Perfect example of, I'm a little old lady. I'm at the canasta club. I don't give a shit about timing. Just make damn sure that my account doesn't go to zero, Brian. And I would just say, all right, well, as soon as we got to 61.8, so we can start putting you on a dollar cost averaging plan. And you can see this is over years. So just buying, 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 buying. Don't break that 5% rule. Maybe you hit 5% here and that's it. I can't do any more buying. I just got to sit there and work my order. And just like TBG said, this is an absolute perfect analogy of TBG, what he just wrote in the room here. Maybe you accumulated through the reload zone. Once you've hit that 5% max limit, then go do something else. You're invested. But just make sure, if you're doing it yourself, you got to check in. Don't lose focus, but just make damn sure that you have those sell half on the double orders. I mean, let's just say you had the middle of this range as your average price. Well, what is that? It's 178. So then that means at 350 bucks, out goes half. Boom, Merry Christmas. You started buying here in 2021. You were totally filled by the middle of 2022. You did absolutely nothing over the past few years. And ironically enough, this is your average. And you see that it turns out that, wow, oh, what a surprise. I got basically the W. And now, just recently, boom, Merry Christmas. I call you up. You haven't talked to me in a year or two because you're all pissed off at me because I got you to buy this crypto crap, but we took appropriate risk and we just let your capital work. And now, Merry Christmas. You have a risk-free trade for the rest of your life. That's the way this game works. I mean, this is a really, really good lesson. But can I come in now and suggest, oh, you know what, Miss Client, Mr. Client, whoever the hell you are, houseplant client, I think this is a pretty good place to start accumulating XMR here. No. Am I going to do crazy things like draw reload zones and say, well, if you want to join the party, throw your bid in at my favorite fib, or even let's maybe just throw it in off that original W there. So you can actually get long from where all the other smart money was long. Yes, That's exactly what I would suggest to you right now. So, okay, cool. Were there any questions in the Q&A document? I don't think so, eh? Okay, cool. Thanks, man. I suppose we can circle back around tomorrow. And if there is a question, be sure to pop in there and fill it out. And for all the new level 1 students, and of course, any other students who have questions, this is the document here. I'll just show you, and ironically enough, we'll probably show it. And there is a question. So boom, there it is. So everybody on the site, and really anybody in the public, you can come and join TRI 30-day trial and fire a question in here. It's a bit cheeky, but I suppose you could do it if you wanted to. And I try and answer all of these questions. So, and if anything, as we get closer to the end of the video, and now that we have the AI timing this video, no more excuses. I can't do marathons anymore. So absolute hard cutoff at 2 hours. And I don't see anything today. So if you do have a question, if you're a new student and you're like, well, you are going to be getting a big dose of strategic planning here coming up soon. This kind of conversation. And I'm sure you have questions about this. This is in the strategic planning part of the level 1 course. So this is the Dow Gold ratio and the preference of hard assets versus soft assets. This is super cool because this was actually posted by a student who was in the TRI program in 2017. So ironically enough, just as we were sort of heading into, they were the best of times, they were the worst of times, that, insane blow off crypto peak. I often conjectured that crypto actually stole a lot of thunder from gold. It's interesting how gold now is outperforming Bitcoin. But having said that, I think that there's a lot of usable information in this study and how to position yourself, hard assets versus soft assets going forward. And I mean, you see like Allen's stock, that's a perfect example of a soft asset. And how they've dramatically outperformed, Amazon, Facebook, all that kind of stuff, Netflix, goes on and on and on. Anyway, so the point is we're actually in a greed cycle now, and the greed cycle actually peaks in 2035. So theoretically, we have 10 years of stock market outperformance ahead of us now, relative to commodities. And actually, I think crude oil prices have actually topped out. But since you have not asked about that, maybe I've teased you here today and you go, oh, wait, Brian, can you talk a little bit more about this fear greed cycle and what's going on here? We could spend some time tomorrow on the Daily Brief doing that. I think that's not a bad idea. I'm going to say, how do I do this? Can I not type? There we go. Surprised no one in level 1 asked about this study. Maybe let's review Monday in DB. Let's see, I'll put that over there. There we go. Okay, so we don't have to worry about that. We're going to wind this show up here shortly. So in a nutshell, hopefully I've talked to you a little bit about XMR here right now, and you tell me, what are the indicators suggesting here? If we did and who asked about this? This was Nick. Nick, am I helping you here? You still here? You tell me, and all of you on YouTube, right? Anybody. What would we call this situation where the price is making higher highs, but the indicators are making lower highs? And more importantly, they are confirming bearish structure. Is this problematic for the bulls? Nick, do you understand this now? This is a very, very dangerous asset to be buying here. And ironically enough, as I said, I'm waiting on a fill on another asset. There is another asset that looks almost identical to this. And actually, what ended up happening is the first move down is the A to B leg of an AB equals CD pattern. So I would normally go A to B. Then we would let some sort of counter trend rally happen. Something like up, right? And then down, and then we would go C to D, like so. A, B, C, D. And then we'd start thinking about, okay, what are realistic downside objectives? So all we're doing right now is the first initial push lower. You could even argue that we probably have trade location coming in. And yeah, I mean, I run this, you know what this looks like? It looks exactly like Cribble. It's almost identical. And also Stellar Lumens. So can you see how all they did, of course, anybody that nanny nibbled and their average cost is in this green box, you just got your opportunity to sell at a double. But can you also see that this is actually a shorting trade location? Reload short zone. Look at that, right into that level. So if we were thinking licks, let's see, we'll finish off with this. So L, do we have, if we're thinking now short or selling, do we have something like that? Let's put a little space in here. So do we have location to justify shorting here? I think the answer is, keep in mind, folks, when this recording's done, it's done. How much time we got left, Chris? Oh, Chris is gone. All right. I'm not hearing from any of you, but we'll say, yes, we have location. Less than 10 minutes. Either work with me quickly and we can get more stuff in, or don't answer me and this is going to take forever. Do we have location to sell? That's a reload short zone. It's moved away from there now, but I definitely think we had location up top. Indicators. Do we have indicator confirmation? I hate to say it, but I think so. MACD bear div confirmed. So now do we have structure? And the answer is, and you tell me, do we have structure to actually frame a trade here yet? Anyone? Bueller? Do we go check or do we go X? What's it gonna be? Do we have an M working here yet? Can I dumb this down anymore? In fact, I heard a guy the other day say, you should not buy a business unless you can sit down and in, say, 3 sentences, be able to explain the idea to a 10-year-old. So that's what I'm trying to do here, is I'm trying to explain how to become a killer trader, how to become the Treasury Secretary of the United States of America to 10-year-olds. Because remember, Mr. Secretary of Treasury, United States of America, he's a hedge fund manager after all, and his job is to manage risk. Right? Did you not hear him say that? And that's the whole process of licks. You are managing risk. So the answer is an X. No structure here yet. So that means you can't do anything yet. We've got location, and actually we slipped out of location, so I wouldn't even really like it. But can you see how if we mysteriously rally right back up into this window and maybe even do a reload zone within a reload zone, and we get that pretty little structure to come in right there, then that X turns into a check mark and we've got ourselves a trade setup, right? And that's exactly what I was showing you on the Bitcoin chart, but of course can't do it nice and smoothly. It screwed it up. I think it was like a 4 hour. Maybe it was a 30-minute. Or maybe it wasn't at all. What the hell is that? Maybe it was, I think it was actually the total market cap. Over here. And then here. Right here. What the hell was this? It says Bitcoin daily on Binance. Okay, why the hell do these other charts not look like that? Bitcoin. Oh yeah, there it is. So remember we had said here, indicator confirmation, trade location, price structure, go. There's actually a trade set up there. But XMR, we've got trade location. Yes. Indicator confirmation. I don't know whether Willie's stupid or not, but I suppose we could throw it up there. Yes, Willie is stupid. But no price structure yet. So we're sitting there waiting for the S. This is literally biggest question on level 1 final test. Oh, good. There you go. Anyway, all right. Why don't we leave the broadcast at that today? Did anybody learn anything? Give me some feedback here. Maybe hit the like button if you did learn something. Maybe comment what you learned today. Do you think you people could do that for us? It'd really be a lot of help. And of course, if you're watching this feed for the first time, maybe consider subscribing to the channel. We could really use the help. It does help the algorithm get our name in front of people. So let's leave it at that. Can somebody actually respond to me? All right, Constantine said something. Yay! So will there be another opening this year for the course? A good question. I would actually say, because we're running out of time on this Breachwater, that if you really wanted to do the course, just get your ass in there now. Julian will probably be able to sneak you in. We're still in the introduction week, so you're going to be slightly behind, but it's just the introductory material, because next intake will be in September. And if you wanted to do the entire education program, I think you're going to run out of time before the end of this cycle. And we're planning on completely revamping the entire site and the educational material in the new year. So my suggestion to you is get your butt in there now. Just, PM Julian on the site. He's going to hate me for it. Even tell him, Brian says you are officially allowed to punch Brian in the nose because he's giving you this opportunity. But just get in there, sweet talk him, and get your butt in the education program now. That's my advice to you. And because we're going into crypto winter next year, I don't really want to shill a lot of people, get into the market, because I think actually the next couple of years is going to be tough. The window is now, so you better get your butt in gear and get this, get your skirt together, as we always used to say, now, because once we get into early, next year, 2026, I'm probably going to be quieting down quite a bit, because frankly speaking, these crypto windows they're painful as hell. So yeah. Okay, why don't we leave it at that? Have yourselves a fantastic rest of your day. Wish us luck on the road, if you could, please, for Lily and I. The only thing left to say to you good people is, of course, don't take no wooden nickels. Remember what your number one job is. And if you don't know what your number one job is, get your butt into TRI and learn. Try to play from a position of strength always. and just try and be a good person. All right. Thank you for the best wishes for Lily. Thank you. Appreciate that. That means a lot. And of course, we'll talk to everybody on the site tomorrow for the daily brief behind the paywall. But like I said, not a bad opportunity for you to sign up for a free 30-day trial and come and listen to our rants. And let's see how Brian's prognostication of how things are going to go here over the near term is going to work. And I can tell you, since I've been talking, the asset that I want to buy, I'm 1.5 cents away. I was almost, no, actually, I'm a little less than that. I'm 1.4 cents away from getting a fill. So if anything, it's good that I didn't talk about it because it's slowly working its way lower here. And I know that if I had talked about it, it would have spiked up and then I would have been all pissed off. All right, everybody, all the best and bye for now.